Hey, this is Matt from InvestiQuant. Today is Friday, October the 13th, 2023. Yesterday, the markets looked like they wanted to go higher early on, but then failed and sold off hard, closing quite a bit lower than where we opened. And we have what's called a neutral extreme down day. It's a market profile pattern where you take out both the high and the low of the first 60 minutes of trading and then close in yesterday's case, below the opening range low or the 60-minute low. So we're going to take a look at that pattern here this morning in today's daily IQ. Let me go ahead and get it set up. I'm using all four instruments. Our setup is based upon entering long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, we're trading lower in the overnight session. So from opening filters, I'm clicking on gap down. The next thing I'm going to do is go to the price patterns library, and we're going to click on close below open. That's going to be important to make this a neutral extreme down day. I need to add that section. The next part is the neutral extreme day. That's from the market profile patterns, the prior day type here. I've got equals next to neutral extreme. You can also grab it right here. That's the pattern that means it took out both the opening range high and low based on the 60-minute opening range and closed beyond that 60-minute opening range. And since I added close below the open, that means it closed on the downside. All right, lastly, I'm going to say we closed above a 10 and 200-day simple moving average. Both of those are true. Now I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time when you are gapping down following a neutral extreme down day in a bull market environment. Historically, 63 samples here in the S&P, 46 in the NASDAQ, 50 in the Dow, 77 in the Russell. Win rates on these strong for the S&P. 67% of those have closed above the opening print. The NASDAQ coming in 59%, and then Dow is neutral and Russell is a touch weaker at 45%. If you take a look at the average moves, average move to the downside in the S&P a little bit larger than the average win. That's also the case here in the NASDAQ, in the Dow, and then the Russell is the only one with a larger average win. So 3 of the 4 have larger average moves to the downside. 2 of them are slightly favored, with the S&P being the strongest. This is the S&P here in the blue equity curve. I've got it highlighted there. So historically speaking, a bit of a mixed pattern, a bit stronger in the S&P than the others. Hopefully you found that helpful. Good luck today. We will see you next time.